Another packed show today, and honestly, this is one of those days where everything is moving at once. We are talking about geopolitics, macro, crypto, tech, all colliding in real time. And if you're trying to understand where markets are heading next, today's show is one you don't want to miss. So let's start with the big picture. Right now, the world is dealing with one of the most important geopolitical tensions, the situation between the US and Iran. Here's the problem: there's still no clear direction. On one side, we are seeing peace proposals being sent. On the other side, Iran is clearly rejecting a ceasefire. So we are in this very strange situation where talks are happening behind the scenes, but officially there are no negotiations. And the biggest issue right now, Iran is demanding control over the Strait of Hormuz. Now, if you don't know why that matters, this is one of the most important oil routes in the world. So, if this escalates, oil price would spike, inflation could come back, and global markets could react very quickly. And this is not just politics. This directly affects your money, your investments, and even your cost of living. Now, at the same time, while the war is still ongoing, we are seeing something very interesting on the global stage. The White House has just confirmed that President Trump will meet Xi Jinping in China this May, and timing wise is everything. This meeting was delayed because of the Iran war, and now it's being scheduled right around the time the US expects the conflict to cool down. So, what does that tell us? It tells us that the US is trying to stabilize global conditions before sitting down with China, because when these two leaders meet, they are not just talking about politics. They're talking about trade, they're talking about supply chains, technology, and global power balance. And this meeting could change the next phase of the global economy. Now, let's bring this into crypto because things are getting even more interesting here. We are talking about Circle today because Circle just had one of the worst days ever. The stock dropped over 20%, billions of dollars being wiped in a single daily candle. But here's the key point: this was not caused by a hack. It was not caused by a market crash, but it was caused by regulation instead. So, a new proposal in the US could ban passive yield on stablecoins. That means no more earning interest just by holding USDC. And that changes everything because stablecoins are the backbone of crypto liquidity. If that model changes, demand could drop, liquidity could shift, and the entire crypto market structure could evolve. So, this is a very interesting story we are trying to break down here in Rockstar TVs. And now, outside of crypto, we are seeing something huge in the tech space. SpaceX is preparing for a potential IPO. And this is not just any IPO we're talking about. This is the largest IPO in the history. We are talking about up to $75 billion raised, a valuation of up to $1.7 trillion. And here's why it matters. This is no longer just a space company. We are talking about space and AI and infrastructure all combined into one story. And when something this big goes public, it doesn't just affect one stock, it can shift capital across the entire market. At the same time, governments are starting to step into the tech side as well. The UK is now testing social media restrictions for teenagers. This might sound small, but it's part of a much bigger trend we're talking about. So, around the world, we are seeing more regulation, more control over platforms, and more pressure on big tech. And that could directly impact tech stocks, that will impact growth models, and also the digital economy. And finally, the story that really ties everything together today is, of course, Bitcoin, because something very unusual is happening. During this geopolitical crisis, Bitcoin is outperforming both gold and the S&P 500. So let me say that again. During war, capital is not flowing into gold, it's flowing into Bitcoin. Institutions are rotating into BTC. Gold ETFs are seeing outflows, and Bitcoin is now being treated as a real-time macro asset. This is a structural shift, and we are going to break down exactly what that means. And of course, later in the show, this is the part you definitely want to stay for. We have a very special guest, one of the biggest crypto YouTubers in this space, so Coinsider. We're going to sit down with him and ask the big question that a lot of you are thinking right now. Is crypto actually going to make a comeback? Because right now, the market feels very divided. Some people believe so, believe that only Bitcoin has a future and the rest of crypto may not survive the next cycle. So we're going to challenge that idea, get his real take on the market, where we are in this cycle and what actually comes next. So make sure to stay with us all the way to the end of the conversation. So anyways, we have got a lot to cover today. Let's get started with the first news on Roxham TV. And this is a story you cannot ignore right now because it could directly impact oil prices, global markets, and even your day-to-day cost of living. We are seeing a very confusing situation between the US and Iran. On one side, there are talks about ending the war. On the other side, both countries are still very far apart. So let's take a look at what happened. So Iran's foreign minister has made it very clear Iran has no intention to hold direct talks with the US, but at the same time, they are reviewing a US proposal to end the war. Now, this is important. Iran says the exchanging messages through mediators does not mean they are actually negotiating. So officially, there are no talks, but unofficially, communication is still happening. And earlier today, Iranian state media reported that Iran would reject a US ceasefire offer, and instead they have presented their own conditions to end the war. We also know that the US has increased efforts to push for a ceasefire, and Donald Trump has reportedly sent a 15-point peace plan to Iran. So both sides are making moves, but they are clearly not aligned. Now, here's the most critical issue in all of this. Iran's counteroffer includes a very strong demand, which is like Iran wants to control the Strait of Hormuz. And this is where things get really serious. The Strait of Hormuz is one of the most important oil shipping routes in the world. A huge portion of global oil supply passes through this really narrow channel every single day. So, if Iran controls it, that means they can influence oil, basically the entire global oil supply. They can directly impact energy prices and they can create pressure on the global economy. This is why this demand is likely unacceptable to the US. In fact, Donald Trump even suggested that control could be shared between both parties, but Iran is clearly pushing for full sovereignty. So let's break down what Iran is asking right now in simple terms. So basically, they want a complete halt to all attacks and military actions. They also want guarantees that the war will not start again. They want clear payment for war damages and recognition of Iran's control over the Strait of Hormuz. These are very large demands, and this makes it so much harder for both sides to come to an agreement. So let's step back for a second. Like this is actually no longer just about like stopping a war. This is about strategic control, regional power, and influence over global trade and energy. And right now, both sides are still holding very strong position. So this is where it connects to you. Like when tension rises in the Middle East, like of course oil prices is going up. If we take a look at Brent crude oil, right now it's sitting at 104 dollars, US dollars is of course like it pushed towards 120 at some point. Right now is correcting down a little bit because the market is sort of expecting some sort of de-escalation to come in the market. So inflation pressure is of course increasing because oil prices going up is affecting the entire global energy price. So it's not just the US or it's not just the Middle East. Like even here in Hong Kong, we've seen the impact as well. So global markets, in other words, is getting more unstable, and that affects, of course, the price of goods and services. Not only oil, it also affects your investment and even the crypto market. We have already seen how quickly markets react to geopolitical risk, and this situation is far from resolved. And as long as it continues, this story will keep driving global markets. So this is something you definitely want to keep your eyes very closely on. And at the same time, there is a geopolitical development that markets are watching as well, because we are talking about two most important economies in the world, that being US and China. They are about to meet face to face again. The timing is very interesting. It's not definitely not random at all. So what the White House has confirmed is that Donald Trump will meet Xi Jinping, and the meeting will take place in Beijing on 14th of May and 15th of May. This is a long awaited summit, and it comes at a very sensitive moment for global markets. So, uh, what else is planned? Like, there's actually more. We are also expecting a second meeting later this year. So Trump will host Xi Jinping in Washington. It's more like a reciprocal visit, meaning both sides are making diplomatic moves. So this is not just one meeting. This is a broader effort to reset or stabilize the relations. Now, originally, this meeting was supposed to happen earlier. It was expected in late March or early April, but it got pushed back about 6 weeks, likely because of the ongoing war that is happening in the Middle East. Donald Trump himself said the US asked to delay the meeting by about a month due to the conflict. Here's where things get very interesting. Like the meeting date is mid-May, mid-May, and according to the White House, the Iran war is expected to last around 4 to 6 weeks. So if you do the math, this meeting is happening right around the time the US expects the war to slow down. So that timing is definitely not a coincidence. So what does that actually tell us, right? Well, it suggests that the US wants to stabilize global conditions before meeting China. They do not want to negotiate major economic or geopolitical issues while a war is still very active. This is about managing multiple global risks at the same time. So when Xi Jinping and Donald Trump meet, the market will be sure to watch out for more signals, that being like trade relations between the US and also China, supply chains and tariffs, technology and AI competition, and the broader geopolitical stability. But according to Poly Market, let's just give you guys some quick data about the results. So when it comes to US and around ceasefire, most of the people, so 78% of people think we're going to get a ceasefire by late this year, so 31st of December. So in other words, the market is not very optimistic that we're going to get a de-escalation very, very soon. And then if we also take a look at the US forces enter Iran by a certain date, this also aligned with the pool I was showing just earlier. So 70% of people expect the US force will enter Iran by 31st of December. So in other words, like it's still taking a little bit of time. At least that's what the market predicted. But anyways, like this meeting, when these two leaders come together, both of them, they have huge influence over global economic direction. And that's exactly what we're paying very close attention here on Roxham TV. All right, so we'll take a short break from here. And when we come back, we are diving more into the crypto news because one of the largest stablecoin in the market, so being Circle USDC, the stocks just crashed 20% in a single day. Is it concerning? Should we be worried here? So be sure to stay with us after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about Stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxum to your clients. Corporate traders, asset managers, old, young, Stretch on Roxum is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
Welcome back to Roxham TV and thanks for sticking around with us after the break. We're now diving into one of the most important stories for the cryptos industry right now, because in just one day, Circle, the company behind USDC, has lost billions in value. And the reason is not a hack. It's not a crash in crypto prices. It's actually because of regulation. So let's take a look at what exactly happened. So if we zoom closer, we are on the daily candle of Circle stocks. So we're sitting at $103 dollars right now. So in just one single daily candle, it dropped actually, like if we take the high to a low, it dropped like more than 22% in a single day. So that is really scary. This is one of the, this is actually biggest drop since going public for Circle stock. So around $5 billion in market value was wiped out. Trading volume surged to nearly 4 times their normal levels, and that didn't just stop there. Coinbase, if we take a look at Coinbase stock, it also dropped around 11%. The entire stablecoin sector was hit. So this was not just one company, it was a full sector reaction. So you could be asking, like, why we're seeing such a huge crash? Well, the trigger behind this move is a new draft of the Clarity Act. And this is the key point. The proposal would ban passive yield on stablecoins, meaning users can no longer earn interest just by holding stablecoins like USDC. So let me repeat that once again. Holding stablecoins would no longer generate passive income. And that is a big deal. And that changes the entire incentive structure. Right now, platforms like Coinbase share stablecoin yield with users, and this is a major reason why people hold USDC instead of cash. If that goes away, users have less reason to hold stablecoins, or a demand for USDC could drop, and that directly impacts Circle's business. And here's the number we really need to understand. So about 95% of Circle's revenue comes from interest on reserves, meaning Circle takes USDC reserves and invests them in short-term US Treasury. That's how they make money. So if USDC demand slows, reserves would shrink, interest income would drop, and revenue would definitely take a hit. And the timing wise is making everything even worse. Interest rates are already falling. So if we take a look at the reserve yield, it dropped from around 4.5% to below 4% in Q4 2025 because of the rate cuts, of course. So even before regulation, Circle's income was already under pressure. Now this rule could hit demand at the same time. So here's another twist. So fundamentally, USDC actually has never been stronger before. If we also take a look at the circulation is around $81 billion. On-chain volume is exploding. USDC is gaining market share against USDT. And Circle just reported strong earnings. So we have a very strange situation. Like on one hand, fundamentals have never been stronger before, but on the other hand, if we take a look at the stock again, like the stock is crashing 20% in a single day. And that, like, things got worse. Circle froze funds in 16 wallets, affecting exchanges, brokers, and trading platforms, causing disruptions across multiple services. This raised some serious concerns about centralization, about control, and whether stablecoins can be frozen at any time. At a time when trust is already very fragile, this added more fear into the market. So let's take a step back for a second. This is not just about one stock dropping. This is about a bigger question. Is the stablecoin model under threat? Because the model depends on users holding stablecoins, platform offering yield, and trust in the system. All three are now being challenged. And this is very important to say. Like, this story is far from over. The law has not even, okay, this is not final yet for the Clarity Act. There's still time for lobbying and changes and active rewards may still be allowed. That means platforms may find new ways to incentivize users and the business model could evolve. But the bottom line is, Circle's crash was driven by regulation fears, not by weak fundamentals, but by a potential shift in its business model. The market is now asking one key question. Will regulation kill stablecoin growth or force it to evolve into something stronger? So this is why we're paying attention, and this is why it matters to you, because stablecoins are the backbone of crypto. If this changes, liquidity in crypto changes, trading behavior would change, and capital flows across the entire market would shift. This does not just affect crypto or Circle stablecoins. This actually affects the entire ecosystem we're talking about. All right, so let's shift gears a little bit. I do want to dive into the biggest IPO in history because this is very important. SpaceX is reportedly preparing to go public, and the numbers are massive. We're talking about a potential valuation of up to $1.75 trillion. So what just happened is SpaceX is expected to file confidential IPO paperwork as early as this week, target a public listing in June 2026. And the scale here we're talking about is massive. The company could raise between 50 to $75 billion, and that would break the record set by Saudi Aramco, which is the world's largest oil producer. This is not just another IPO. This could be the largest ever, and the timing is again very interesting. The listing is expected around June, potentially aligning with Elon Musk's birthday, but more importantly, this comes at a time when global markets are watching AI, they're also watching space, and infrastructure plays very, very closely. So something about SpaceX is that it's actually no longer just a space company. SpaceX has evolved into a hybrid platform. It dominates rocket launches globally. It runs Starlink, which is one of the fastest growing internet networks. And now it has merged with Elon Musk's AI company, being XAI. So the story is shifting. This is now, we're talking about a space company. It's also an internet company, yet an AI company, all combined into one. So one of the reasons for this insanely high valuation is the future potential. SpaceX is planning space-based data centers powered by solar energy in orbit and using Starlink as the data network. So the idea is simple: solve the energy and cooling problems on Earth by moving AI infrastructure into space. This is very ambitious vision, of course. So let's talk about the numbers right now. Like, even without public figures, public financials, estimates show around $16 billion in revenue, about $7.5 billion in profit, and Starlink alone has around 9 to 10 million users. So here's the catch though. At a 1.7 trillion valuation, SpaceX is trading at a very extremely high multiples, meaning investors are pricing in massive future growth. Of course, that means that there's risk involved. So XAI is burning around $1 billion per month. The valuation depends heavily on future AI and space projects, and key technologies like Starship still need to succeed. If any of these fail, the stock could see a sharp corrections after the IPO. This also affects Tesla investors because for years, Tesla was the main way to invest in Elon Musk's vision. Now with the SpaceX IPO, capital could shift from Tesla into SpaceX, and that could apply some short-term pressure on Tesla stock. So this is something definitely worth paying very close attention, because when a company this big goes public, it doesn't just change one stock. It actually changed the entire market we're talking about. So we'll go on a short break from here, and when we come back, we are diving into more Bitcoin news and also some social media ban going on in the UK, and that happened to be a big shift in regulation. So don't go away, do stay with us after the break.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxum to your clients. Corporate traders, asset managers, old, young, Stretch on Roxum is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
We are in heaven at 11.5. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We're now diving into a UK trials ban on social media, and this is the start of actually a major global shift in how social media is regulated. So, what's happening here? So, the UK is testing something very controversial: a partial social media ban for teenagers. So, the UK has announced this trial. Around 300 teenagers will take part. The trial will run for 6 weeks and it will test different ways to limit social media use. This is not a full ban, though, it's a step into that direction. So the government is testing 4 different approaches. Some teens will have certain apps removed completely, be limited to 1 hour per day on apps like Instagram, TikTok, and Snapchat, or maybe be restricted by curfews. No social media from 9 p.m. to 7 a.m. And one group will continue using social media with no limits. So this is a controlled experiment. So, what's happening? Why is this happening? This actually comes after the UK lawmakers rejected a full ban for under 16s earlier this month. Instead, they chose to study the impact first. So, the goal is to understand how social media affects sleep, how it affects mental health, stress levels, and overall well being. The government has already received over 30,000 responses from parents and teens on this issue. And this is not just a UK story we're talking about. This is actually a much bigger global trend we are witnessing. For example, Australia has already banned social media for under 16. Spain has introduced similar rules, and France is also pushing for restrictions. So Europe is clearly moving into that direction, which means stricter control. At the same time, pressure on big tech is increasing. Regulators are asking platforms to improve age verification and prevent strangers from contacting teenagers. And this is important because just recently, Meta was found liable in a US case and ordered to pay nearly $400 million in damages. The reason for that is the failure to protect children on its platforms. So let's take a step back for this moment and let's see what's really going on. This is not just about teenagers using social media. This is about government control over tech platforms, accountability for big tech, and how digital products impact society. We are now entering a phase where regulation is catching up. So the bottom line is the UK is not fully banning social media just yet. This is just like testing restrictions, and this could lead to a wider regulation across Europe. It's still extremely early, but it signals a clear shift. If this trend continues, we could be looking at a future where social media is no longer fully open, but increasingly controlled. And this is something markets will be watching very closely as well. Speaking of the market, let's hop on to our favorite asset of the world, so being Bitcoin. So there's a major shift we are witnessing in front of our very eyes. For decades during war, money flows into gold, but this time is very different. It's flowing into Bitcoin. So let's take a look at what happened. Since the start of the US-Iran conflict, Bitcoin has outperforming both gold and also the S&P 500. Capital is rotating into Bitcoin as uncertainty increases, and according to Bloomberg analysts, the roles have been reversed. Gold ETFs are seeing outflows. Meanwhile, Bitcoin ETFs are seeing fresh inflows. So that is a interesting dynamics that we are seeing. As for the market reaction, let's take a look at the Bitcoin's price action. So Bitcoin managed to jump from around 68K back to above $71,000. This was a roughly 4% move in a very short amount of time. And this move came after reports that the US sent Iran a 15-point proposal to end the war. Markets reacted immediately. At the same time, if we take a look at oil, oil dropping quite sharply is retracing from we're reaching $120. Now we're tracing quite significantly because like traders starting to price in there might be a possible de-escalation event and a reopening of the Strait of Hormuz. This, of course, reduces fears of supply disruption and lower inflation expectations. So at the same time, Bitcoin moves quite significantly, very quickly to the shift. And this is important. Analysts are now calling Bitcoin a real-time macro indicator because Bitcoin trades 24/7, is global, and it reacts faster than traditional asset. But for this news, like when it comes to gold versus Bitcoin, there's still a key takeaway. In the past cycles, war meant buying Bitcoin, but right now, institutions are moving into Bitcoin instead. Gold is no longer seeing the same demand through ETFs. So instead, Bitcoin is attracting capital right now. I would like to add some perspective here. I will say is another reason is because gold reached a new all-time high, seeing that exponential growth, a little bit crazy. So it makes sense for gold to have this correction. So yeah, it is correct that Bitcoin at the same time is seeing a diverse relationship here. And however, this is not just about price. This is also about how capital behaves. Investors are now choosing speed, liquidity, and global access. Bitcoin offers all three, and that's why it's starting to compete directly with gold. But we are not out of the wood yet, so still very risky because Iran has denied negotiations. The situation still looks very unstable. That means Bitcoin will remain very headline driven and volatility is likely to follow to continue. But this is still worth paying attention because this is not just price movement. This is a change in global behavior. When capital chooses Bitcoin over gold during war, it shows where trust is moving. It shows what investors see as the new safe haven asset, and it signals how future crises may play out. This could redefine Bitcoin's role in the global financial system, and this is something you don't want to ignore. That's why we're paying attention here on Roxham TV. So we'll take a short break from here. Don't go away because when we come back, we have got a long-awaited interview with one of the most popular crypto YouTubers out there. So Coinsider will get his honest take on the market, whether crypto can actually make a comeback and what he's watching next. So do stay with us, don't go away, and we'll be right back.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
How about Stretch preferred stock on Roxum? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxum gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxum to your clients. Corporate traders, asset managers, old, young, Stretch on Roxum is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
To the break. Now we're moving into the conversation I think a lot of you will enjoy very much. Joining us today is Kevin from Coinsider, one of the most well-known crypto educators on YouTube, known for breaking down complex market ideas into clear and easy to understand insights. In today's conversation, we're going to dive into his current market thesis. The debate around the 4-year cycle is going to be an interesting one, and what he thinks is actually happening beneath the surface of this market. We'll also get his take on where crypto goes next and what retail investors should really be paying attention to. So, Kevin, welcome to the show. It's great to have you today.
Hey, Jimmy, I'm happy to be here and excited to dive into all the most interesting topics on the list today.
I mean, I'm really excited as well because, like, I have to say, I know I didn't really mention that when we see each other because that is kind of weird. But like, I respected you as a crypto YouTuber because, like, you and I have been in the space to see enough crypto influencers that a lot of them they are not very legit. But you're one of the few that are actually legit and doing educational content even through the ups and downs. Because like right now we're still doing content in bear market, so I have a lot of respect for you. So I'm very looking forward to be catching up with you during this conversation here on Roxum TV as well. So, but since this is your first time here on Roxum TV Hong Kong, why don't we start with a little bit of background just to warm things up? So for viewers out there who maybe hasn't watched Coinsider Coinsider yet, which I doubt, but like maybe we could like take a step back and start with your personal journey. How did you get into crypto, and why did you decide to get into crypto YouTube in the first place?
Yeah, so this journey has been a long one already. I started off in 2017, and really just got caught up in the tech possibilities. Like the ICO era and all those different like brand new ideas that were floating around out there. Wait, let me move my mic. But yeah, and then back then there wasn't that much educational content going on. So I was like, hey, like, why don't I make some content that people like myself might need? And so that's how it started off. The channel was initially called Bitcoin for Beginners. But then a couple years later, we changed it to Coinsider to have a broader take on the entire sector. And then most recently, we've been doing more content about like Bitcoin and markets as a whole, because that's kind of what's interesting these days. And it's less like specific altcoins. That's really not interesting these days, but more like where Bitcoin's headed, like what are the biggest theses that retail is interested in, and things like that. So it's been a long journey, like I said, but we've been covering this sector and analyzing the markets and the trends for a long time now. So I feel like I've seen a lot in this space.
Yeah, you've definitely seen a lot because, like, I watch your content on a regular basis, and I noticed you have done like 1,000 videos or close to 1,000 video on Coinsider, the channel, which is like a really impressive number. Not gonna lie. So I wonder, like, after seeing all the ups and downs, maybe in crypto YouTube as well, what's been the biggest surprise building a crypto YouTube brand out there? Like maybe compared to other crypto channels out there. I know you have strong take when it comes to influencer, so maybe you could share that on air. It's going to be a hot take for sure.
So your question is like, I'm sorry, your question was like, what's the hardest part about building being an
Yeah,
influencer,
maybe
or?
what surprised you in general building all this like crypto YouTube content or building this brand? Is there any ups and downs you feel like you really want to share to your viewers?
Yeah, I would say the up and downs is just riding the waves of this market. This market is very cyclical, as we will touch on in a bit. And because of that, attention comes and goes. And when we're making content, that is a big piece of it. So I think that's the challenging part, is to ride the waves properly. I wish we didn't have to do that, to be honest, and it could just be like this instead of like crazy roller coaster. But yeah, I would say that's one thing. And then another thing is just to um try to build a long-term with a long-term view, and not just be like some influencers and just like shill like crazy, and just push like really high risk things like small cap meme coins, get their followers wrecked, and then once they're wrecked they don't come back, right? So just also having a long-term view and trying to really think about your community as well. I think that's also something that's hard to navigate, especially with how other influencers or other channels are approaching it.
Yeah, I do agree with you. Like being in this game long term, community is all you should care about. Yet some influencers, they are out there shilling the rubbish coins to the community, and then the community got wrecked, and somehow they are walking away with millions of dollars. So that is something I still don't understand in this day and age. So like you keep talking about community because like one thing I noticed that is that you built a retail community called Retail DAO. Could you
Yes.
share a little bit more about that community, what it does? Why did you have this idea to create this DAO in the first place?
So I wanted to make a community for people like myself and people in my community. Um, and so basically what Retail DAO is it's a community of like-minded people who care about markets, who care about investing and trading, but we're not like some crazy degens. You know, we're like we take this seriously. We like to do research. We like to look at various theses and things like that. And basically, so we're a token gated community. So there's like a membership aspect of it. But basically, we just like debate, discuss interesting things in the markets, definitely about Bitcoin and crypto, but also outside of it. Like there's people talking about like commodities, like gold, geopolitics, of course, because that's like the big theme lately. We talk about like macro, the Fed, and sometimes even stocks too, you know, because um like retail investors at the end of the day, we're not married to one asset class. We're not like, oh, we're only into like XYZ. You know, like if you think about an average retail investor, just I don't know, some random guy in the middle of the US or some other country even. Maybe a few years ago they were interested in NFTs and then they were interested in like prediction markets these days and then maybe they're interested in a certain sector of stocks like maybe they got into like gold and silver. So the point is like they're not people are interested in different things and their interests evolve over time. And so that's what we do as well. Like we're open to chatting about anything. And we also have, instead of just chatting, it's not just a Telegram group. We also have like different tools and different like we do like weekly missions for people so that like we can all go research something together or all go like farm an airdrop together or do something together that's valuable. So that's kind of the high level idea of retail DAO.
Yeah, that sounds very promising because I remember I first heard about this idea was like 2 years ago. I think it was like a really a friendly way to basically bring retail because like sometimes we don't maybe we have some information maybe we are not we are unsure about so having this community maybe they could chat with one another it kind of not only create that comfort but also improve on the research. Maybe there's something lacking there. Maybe something I'm not seeing about this project. So having a community strong like this, so I think it's very, very valuable indeed. But going back to what you mentioned, like we have been, you and I, we've both be in crypto for quite a few years, and we have seen different narratives come and go. Like, for example, you mentioned NFT, and I do agree with you. Like, marrying your bag for the entire life, I think that is like the stupidest idea we could ever be in. And because this narrative or this statement was proven right again, unfortunately, because like 2025, when we were all looking forward for the super cycle, for the prolonged bull market because now that the big guys are here, institutions are here, like we didn't see the returns for altcoins like we expected. So like during this segment, I kind of want to shift gears and focus on the market perspective. Kind of want to get your insight on the market right now. So like, where do you think we are in the market right now in 2026? Because we saw an all-time high. Looks like it was an all-time high. So in 2025 October, and you have been calling that a stealth bear market. What do you mean by that? And where do you think we could possibly be heading in the next few months?
You said that stealth bear market, right? Like a hidden bear market?
A stealth bear market.
Yeah.
Yes.
Okay. Yeah, so I mean, right now we are in the bear period. There's no way around that. We're definitely not like like people were saying for a long time that we're still in a bull market and that it's just a temporary correction. Time has proven that false. So I was wrong about that too. I was exploring some theses that we were still in the bull mode. So we are without a doubt in the bear period. But the question is like, how long does that last, right? I mean, the 4-year cycle folks, which are looking like geniuses once again, are saying that it's Q4 of this year when we turn. But I was exploring a thesis like a few months ago that we've kind of been in a bear market for longer than people expect. Like, yes, Bitcoin hit new all-time highs in October 2025, but that's against the USD, which was falling in value versus other currencies, versus other assets. So if you look at it versus the euro or the Swiss franc or other things like gold, etc., it did not put it in a new all-time high, and the chart looks very different in those perspectives, right? And then also, like you said, altcoins have not been in a bull cycle. Like 2025 was like flat or negative at best. So altcoins have arguably been in bear mode for years now. I mean, besides like a few sectors, like the AI agent sector a little bit, and then some other perp dexes for a little bit, right? So, but those were just like inside of crypto rotations. Like they made money, but then other things lost money. It wasn't like everything went up like 2017 and 2021, right? That was everything went up. Doesn't matter what you put in your money in. So arguably we haven't had that in years, like this entire cycle. And that's something else I want to say. Like one thing that crypto has taught us is that the market always surprises us. Like everyone thinks something's going to happen and that the market throws you a curveball. So that's one thing that we as market participants have to kind of just internalize and keep in mind. It's like, just don't be too sure of any one particular thesis, because just as soon as you think you're right or that you're going to be a genius, put all your money in, it's not going to happen the way you think it is. So yeah, that's one thing that I've kind of internalized through the years, is not to just be overconfident and that think that just because it's happened like 5 times in the past that it must happen now as well.
Yes, I agree with you. Like the market always find a way to humble us, and you and I, we've been wrecked before. I mean, I personally, I have definitely been wrecked before. I don't know about you, Kevin, but for sure, like I lost money during my crypto journey as well. Of course, I made a little bit of money, but like going back to what you mentioned, because like sounds like you're not a believer when it comes to the 4-year cycle. So like I have to make my stance very clear. I do think the 4-year cycle is still intact. So my next question I want to ask you is like, if the 4-year cycle you don't think it holds any value anymore, what replace it in 2026? Is it macro or narratives like AI? Because like we saw AI is taking a lot of talents or attention away from crypto, or you think it's something else that will replace the 4-year cycle?
Yeah, so I think it depends on what people think that the 4-year cycle is. Like if it's driven by like the halving and things like that, I think that logically, and also like, every time the amount of supply cut is less and less, like it's in half every time, right? So I think that so obviously it definitely looks like I was wrong and that this 4-year cycle is playing out. But the reasoning behind it is something that I think is still up for debate. To answer your question, I do think that Bitcoin is driven by bigger forces these days. Like Bitcoin is such a big asset these days. Back in the day when we first got into crypto, it was tiny. Like we were legitimately wondering like if it was going to go to zero, because like BlackRock wasn't into it. The financial media never talked about it. It wasn't in people's 401ks. That's the US's like retirement accounts. Nation states didn't own it back then. It was legitimately tiny and had a much higher chance of just going to zero back then. So I mean, I'm just even like 7, 8 years ago per se. But Bitcoin is huge these days. It's a multi-trillion-dollar asset, and it's touched by institutions and nation states and governments and things like that. So I think that it's less on like the prior dynamics, like the retail whale dynamics, and less on the halving and the miners and stuff, and more on macro and liquidity cycles and things like that. So like things like the Fed, things like the central banks of the world and liquidity and interest rates, all those things, just macro liquidity cycles. Because here's the thing, liquidity has a cycle too. If you look at the liquidity charts and how it changes over time, there is a cyclical shape. I mean, a lot of things in markets, as you all know, as we all know, a lot of things in markets have cycles into them for various reasons. And so one argument is that, yes, Bitcoin has a quote unquote 4-year cycle, but that is kind of a coincidence that is led by macro forces or liquidity forces. And I think that makes a lot more sense to me than saying that it's still the same underlying driving forces like now and also indefinitely in the future, which makes absolutely no sense to me.
Yes, I kind of have a crazy idea based on what you just told me. So, what if the 4-year cycle, the traditional Bitcoin 4-year cycle that we have understood from all these years of Bitcoin history, what if it wasn't driven by Bitcoin halving all this time? Maybe it was driven by macro or some sort of like a outside liquidity instead of the halving cycle. Like, would that make sense or explain why every 4-year roughly we see a Bitcoin price movement like this, in your opinion?
Yes, and then I think that all the halving stuff was just kind of a coincidence, is my take. Because it lines up nicely with like the halving stuff. And um but arguably speaking, like the 4-year cycle has been hard to read even this past cycle. Like if you remember, Bitcoin reached new all-time highs before the last halving. And that was never done before. People were like, it's always after the halving. And then it kind of like slowly builds into it. And they had all these fancy explanations and reasonings as to why. But it didn't happen that way. And so arguably based on that, the traditional cycle was already broken, and large, and like you said, arguably speaking, it could be because of different liquidity movements. But even that is hard to like map one to one, right? Remember all these people talking about the M2 correlation. They're like M2 Bitcoin. They did the charts, and then a couple months ago, the charts went like this, and it hasn't even caught up. So, like, it's not that simple, is the point. And even if it is driven by macro and liquidity, there's like dozens and dozens of different forces there that are all kind of pulling and pushing and pulling Bitcoin in different ways.
Yeah, that makes a lot of sense. So, like, one thing we still haven't got a full explanation because, like, we got the all-time high on exactly 6th of October 2025, but like, what happens days after that? We saw like something broke in crypto, which is the 1010 event, like liquidation day. So, in your opinion, in your like thesis, like, what do you think it actually happened? Like, why we have we saw what we witnessed on 1010. Is it some market makers that is rumors about market makers lost a lot of money, or in your opinion, what happened basically?
Yeah, I mean, there was like it was there was a macro shock, right? Because Trump announced big tariffs on China. I think that's what happened on that day. And then the market had a big correction. But then there was some like Oracle issues, like with stable coins and things like that. And then that caused like some stress in various exchanges and various markets. And then a lot of market makers did get hurt, a lot even. And then they pulled a lot of liquidity, and then some altcoins wicked to zero because of that. So that was a huge mess. Um, by now, though, it's been like so many months, and nothing really kind of floated to the top there. So it seems like everything is contained at this point. But that was like a within crypto event that has kind of pushed Bitcoin down or kept Bitcoin down for months afterwards, as people were, maybe some market makers were like selling a lot afterwards to try to shore up their bags per se.
Yeah, like I personally, I think this cycle is so weird, and that makes my job analyzing the market a lot more difficult. No, not gonna lie. So not only on 1010, we saw the massive liquidation day, and then the entire crypto market got wrecked, and we still haven't bounced back from there. But like not only on that day, but if we look back into this bull market that we had. So maybe between 2023 to 2025, the bull market that we had, it was not like any previous cycle that we witnessed. Because like before that, we had altcoin season. Everyone was waiting for alt season. Alex Becker was calling for alt season every single day
Every
on his
day,
channel. So
yeah.
like exactly, so every single day. And not gonna lie, I sort of expected an alt season. That's why I was talking about crypto back in 2024 was like so hyped by these AI crypto narratives as well. But like even the last cycle, last bull market we had, we didn't see um, we didn't see retail get back to the market because it wasn't being reflected in the price action. It wasn't being reflected in the altcoins performance. So why do you think this this cycle is so different? What do you think actually happened compared to the previous bull run we had?
Yeah, I mean, that is one part of the stealth bear thesis that I was exploring. And the thesis is that we've not really been in a bull cycle, and it's only been like, or like even before this recent bear phase, that we haven't been in a real bull cycle, and that it's been just like within crypto rotations. And here's the interesting part. The argument that I was making in that thesis is that, okay, so obviously altcoins didn't have an alt season, but the argument I was making was that Bitcoin, the only reason why it made new all-time highs was because of Michael Saylor himself. And he has bought so much Bitcoin, almost a million Bitcoin these days. It's like what, 700,000 plus? He's been buying so much. And we have him to thank that Bitcoin even reached a new all-time high in dollar terms. If we didn't have Michael Saylor buying that much, maybe Bitcoin would never have reached those new all-time highs, and it would have done the similar things as altcoins and kind of been more just more like muted per se. Like it would have gone up a little bit, but there is a world where it only went up to like, I don't know, like 80K or something instead of 120K. So if you think about how much he's bought, we can attribute some of that like bullish price action to him, and also all the other DATs that copied him. But I kind of group it all in because he by far buys the most out of everybody.
Yeah, so speaking of retails wasn't fully back in the previous bull run, I wonder if we have like some sort of actual metric to measure whether retail was fully back or not? Because when we talk about narratives like this, it may sound very fake to our viewers. So what is the metric to measure whether retail was here or not? Was it just like price performance for you, or you use some other metric to measure whether retail was fully back or not?
I think there's a lot of metrics, things like, social media mentions, whether it be on X or YouTube or Reddit, wherever, that has been low for a long time now. And also things like app downloads, like Robinhood downloads, Coinbase downloads, Phantom Wallet downloads. During like the meme coin hype, Phantom Wallet downloads were going really high. But right now it's like kind of back down again. So I think it's things like that. Just apps that retail uses, things that retail watches or consumes content of. We can track those to see if retail is here or not. I mean, retail is still around, but they're just interested in different things, be it like prediction markets or whatchamacallit, or like different stocks. Not every stock, because even the stock market these days have been kind of struggling. Like the Magnificent Seven, the Mag 7, they're all down year to date. So retail and even gold and silver is down. Like silver is down so much from its all-time high. So RIP to anyone who FOMO'd and tried to buy into silver, right? They're down like 50% or more from all-time high. So yeah, I mean, things are not easy. This is not easy for retail right now. Like if they FOMO into stuff, they're probably going to get wrecked, is the point.
Yeah, so retail has a history of basically chasing the narratives and end up getting wrecked, because using the gold or maybe silver example that you just gave, silver reached a crazy high, and then I remember some of my friends were asking me maybe getting into silver, it was a good idea. That was always one of the metrics to tell that maybe it's a little bit hypey and maybe we should calm things down. And looks like we have a massive correction for a massive asset like gold, like silver. So speaking of retail chasing different narratives, one narratives that we have seen in the previous bull run was stablecoins. USDC, for example, went IPO, and then the stock price absolutely skyrocketed, and of course, right now, corrected it's down quite a bit. So I wonder, for stable coins, kind of do nothing for retails out there. We know that stable coins is ultimately the strongest use case for crypto, right? In the crypto market. So I wonder for retail, how could they take the pie for stable coins, because it's doing nothing? Do retail should retail just hold USDC stock? Or is there any strategy you would advise retail to do?
You mean like what they should do when the market is tough, like it is right now?
Yeah, so it's more directed towards stablecoin, because I'm sure you and I would agree stablecoin is the one of the strongest use case for crypto out there. But if retail want to invest into the stablecoin sector, it sounds really wrong because stablecoin doesn't do anything. Is there any strategy for retails that they could maybe have a piece of that pie of that stablecoin exponential growth?
Yeah, I mean, there's stocks and companies like Circle. Coinbase also indirectly benefits from it. And there's also stablecoin projects, right? Like Plasma, Stable is the name of one of them, things like that. Tether, there's also rumors that Tether is going to IPO in a bit. I think that would be an interesting one depending on the valuation. But besides those, there's not really that many ways of getting exposure. I mean, even Stripe has their Tempo blockchain, which is going to be very heavily stablecoin focused. But they're not a publicly traded company yet either. So there's not that many ways to invest. I think Circle is probably the most direct one, but then you can even argue in this tough market, like their valuation potentially is a little high. So I'm not sure that I would personally want to, um, I mean, if you're investing for the long term, then fine. Like if you're planning to hold for years. But right now, if I were just to do like a midterm swing trade, I don't know if I find that enticing currently. But long term, sure. I think long term, there's a few strong stablecoin options. Those crypto projects, tokens being one, and then Circle and Tether and Stripe being some other ones.
Yeah, that sounds fair. So, it kind of it's a perfect segue for me to ask this question. So, for our beginners who's trying to get into maybe not just crypto, maybe in the market, like they don't have a lot of money to begin with. Like you mentioned, right now it's very volatile. Maybe even USDC for the Circle stock, the valuation is a little bit too high. Maybe it's not the best time for beginners to enter the market. So, in your opinion, what would you recommend for beginners to do? Is it airdrop like some narratives 2 years ago, or you think there is a better way to start with small capital for beginners?
Yeah, I think just like do a lot of research like normal, find things that you think are very promising for the long term, and just dollar cost average slowly into them, right? I know that's boring, but um, for people who want to attempt to time the market a little more, they have to pay attention to macro right now because I feel like everything right now is dominated by macro. And when things turn on the macro front, then it's going to be easier to, you're not fighting against the tide at that point. And a lot of stuff that are promising will all go up together, some faster than others. But it's when that turn happens, and a lot of macro experts often debate and discuss like what's going to happen in terms of liquidity and central bank decisions and things like that. And also geopolitics also has a factor, right? Like the price of oil, if it's too high, that's also a problem. So yeah, I think it's important to pay attention to all that to know like when it's time to start to get a little more bullish versus how it is currently.
Yeah, you made a really good point, especially about macro, because Bitcoin. Okay, I'm just talking about Bitcoin specifically speaking. So, Bitcoin is like a more than $1 trillion asset. So, like it makes sense that it's starting to tie with the macro or the general market sentiment. It just like it makes logical sense to me. So, like that is the perfect segue for me to ask this straight question to you, Kevin. So, like, there is narrative out there. We have seen only a Bitcoin season, like based on your thesis, maybe it was driven by Michael Saylor himself. So, do you think some people are saying that Bitcoin is the long-term goal, while crypto is never going to make a comeback? Do you agree or disagree with that statement, or you think crypto is going to come back with a new all-time high again?
You mean like the rest of crypto, like the market cap minus Bitcoin, essentially? So
Yes. So basically any crypto apart from Bitcoin.
I do think that crypto will have a bull season again. Like if liquidity conditions get loose once again, it's going to flow into riskier assets, right? Because at that point, like Bitcoin, what are we chasing? Like 2x gains, 3x, 4x maybe. But some people want 10x gains or more. You can't really get that with Bitcoin with how big it is these days. So they're looking at like smaller cap coins or mid cap coins. And so the point is like when liquidity is flowing through the system really fast and furious, then it absolutely will flow into these riskier assets like crypto. Now, will the alt season look like before? I don't think necessarily because of how many tokens are out there these days. But even dead coins, we've seen dead coins get a pump before too. Like that was a hallmark sign of late bull cycle. It was when dead coins are pumping like crazy and nobody knows why. So I do think that like altcoins will have a new all-time high, but will it be as easy as before? That I don't think so. Like it's not
Yeah, I mean,
back in the
maybe
day.
thanks to yeah, thanks to Pump.Fun as well. Maybe one of the reason why we didn't see such a easy alt season because like there are millions coins launching every single day we're talking about. So when the market cap stays the same, but at the same time you got a dozen, maybe millions more tokens, then you know how it goes. You know the gist. So like from what you told me, you think altcoins or crypto minus Bitcoin, you think they're going to have a comeback. So like there are so many sectors out there. I wonder like which sort of sector you are more confident that going to make a comeback for crypto, and which sector specifically you're trying to avoid.
Comeback, I think that's really hard to say. Obviously it looks like the AI crypto space will come back in some way, shape, or form. Right now there's a lot of stuff going on that's different than the stuff that was going on back in the day. I mean, still BitTensor ecosystem, Virtual's ecosystem, they're popping off kind of. But other than that, it's really hard to say. Maybe privacy, that's always been kind of a narrative, but it's kind of been underwhelming in recent cycles. But like, we had Zcash popping off quite a bit a few months ago. And what else? Stable coins, maybe things related to stable coins, perp dexes with like Hyperliquid doing so well. Those I think are all promising and all have product market fit in some way, shape, or form. But a lot of them are not going to come back. Like a lot of legacy, like maybe gaming or definitely NFTs. I mean, they could come back in another form in some other use case potentially. But there's a lot of like dead projects, like just like even blockchains, layer one blockchains or layer two blockchains, they have very little usage and their foundations are pulling back. A lot of teams are not building on them anymore. They're kind of like ghost towns. So like, things like maybe Polkadot or even smaller layer twos like Blast or whatever. I don't even know all the
That's
names of
too
them.
painful to hear.
Yeah. So it's all I think a lot of old projects are already dead essentially. They're kind of like ghost towns or zombies per se.
I wonder if the community on retail DAO, any strategy they're pulling, are they farming on DeFi or basically just focus more on stocks because that's the attention where the liquidity is going to.
I think we have a very diverse group of people and we have diverse interests. So you'll find people farming airdrops still. You'll find people doing on-chain plays because there are still some on-chain plays while the things are quiet. But then we also have a lot of people interested in macro, in like geopolitics, what's going on with oil, things like that, gold. So to answer your question, they have in retail DAO at least, there's a wide range of interests. And we have people looking at everything.
Amazing. So I kind of want to shift the topics a little bit, and I want to talk about crypto YouTube because you are one of the biggest crypto YouTubers out there that is still around, still making content, and most important point is legit. So, like, my next question is: do you think for a new joiner in the crypto space who really wants to get into YouTube and start making content? do you think is worth doing that in 2026 for new creators? Or you think maybe stay in other niche will have a better chance of being successful?
Um, I mean, I think if they're really interested in the crypto space and they don't care that it's a bear market and they want to just like dive into all the nitty-gritty protocols and try on-chain stuff, they maybe they're like Jesse Pollock, the founder of Base and Coinbase, and they're like, on-chain is the future, then I think sure, like they can make content in that angle. But if you're just looking to like build a big audience and reach a lot of people, then maybe like just being solely focused on crypto isn't the right approach. And they need to go a little bit broader and talk about markets and other stuff that's interesting to investors and traders and not only one particular asset class.
Yeah, I noticed content-wise on Coinsider, there's a little shift as well because you guys tend to focus on crypto only, but like you said, you try to do different content, maybe finance aspect, maybe how macroeconomics are doing, or maybe how the stocks market is doing. So, like, I wonder, like, what's your portfolio right now? Like, are they still majority in crypto, or you pivoting to more a traditional asset or maybe even in stock market?
Yeah, I do have some stocks, but like I said, even then, it's not doing that well. It's not like a full-on bull market in the stocks world. So I would say I'm quite defensive currently. I have a lot of stables and things like that. So I'm just waiting for a better entry currently. Is my answer to you. I have been looking, so I haven't been like, like when things are bullish, we're deploying like crazy. We're like, here, take some stables, take some money. I want this stock, I want that token. But that's not the case with me right now. I am quite defensive across the board. So to answer your question, I am in stocks a little bit, but not really that notably compared to anything else.
Okay, so not right now. That's what I got from the conversation. But what about looking ahead in 2027? Like, what's your best case scenario for crypto? Do you think we're still going to consolidate, bounce a little bit, or we're going to see a bull market that we've been waiting for years?
Um, I think we could see a bull market next year after this bear market bottoms eventually. And I mean, I think if we can get some even better entries, like lower Bitcoin, I don't know how much lower it would go. I think it like the S&P would have to drop quite a bit for Bitcoin to go much lower, in my opinion. Um, but if we can get some better entries into great crypto projects like, like Bitcoin, Hyperliquid went up quite a bit from its bottom lately. Um, things like that, then I would love to get entries and just hold for like a few years, 2, 3 years. Maybe they would go up quite a bit. So I do have my radar on various projects to buy and hold. Hopefully when the market eventually bottoms, whenever that may be this year.
Amazing. That was some great tips from Kevin from Coinsider for viewers on Roxham TV. So, Kevin, it's been a pleasure catching up with you and having this conversation here on the TV program show. So, like for our viewers on Roxham TV who I doubt that they haven't seen your content before, but like some of them may still haven't subscribed to your YouTube channel. Basically, if they want to see more of your videos or maybe get to know your market perspective that they really like your takes, where's the best way to reach out to you?
Yeah, just go search on YouTube Coinsider. It's in the video or like in the banner below. And yeah, I'm there, and also you can find me in Retail DAO if you're looking for a community of very active and like-minded investors, then just check out our website, retaildao.xyz. I hope it's okay to plug that.
Yes, for sure. So thank you, Kevin, for your time joining us and breaking down the market to our viewers on Roxham TV. So thank you guys for watching. My show live here is Monday through Friday, 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry. The recorded version is also available on both channels. So being Jam Crypto YouTube channel, my own channel, and also on Roxham TV. Thank you guys for watching, and make sure to subscribe and stay tuned for more shows lined up by our other hosts here on Roxham. So see you guys tomorrow.